Hey, welcome back everyone to another episode of Trading Trench, brought to you by Femex. If you haven't checked out their exchange, I really like using it because I can get sizable entries with low leverage, and it's, a very secure platform. Today, I'm excited to bring you Mr. Anderson, the legend, True Crypto 28 on Twitter. I have learned so much from him, and I'm really excited for you guys to get a behind the scenes look at what makes him a successful trader, and hopefully he'll give us some crazy alpha that's going to help us going forward in our journey as traders. So, Mr. Anderson, thank you for joining us, taking time out of your busy day to come on and have a podcast with me.
Oh, I appreciate it, brother. Long overdue. Happy to be here. Obviously, you know how I feel about you, so let's get to it.
Awesome. Thank you. Yeah, let's get right into it. I really am curious about your background, like kind of why you started trading and where you started trading.
Sure. Yeah. I mean, background isn't much of a finance. Well, I shouldn't say that. I was in finance in school. I was an engineering major. I looked at, I moved from an engineering major to a finance major, and then I minored in psychology. But I was a college athlete. I wasn't looking at stock markets or anything like that. And right before I finished school, a friend of mine turned a small fortune in the stock market he turned a small amount of money into a large fortune. So that was it. My mind was only on that for a short period of time. Let me just make some money. I wasn't thinking anything else. And I began to intern in Washington, D.C. for a trading firm, small trading firm. And my first trade was a 4x in 3 days. Did nothing the first 2 days. The third day at 4x. And at that point, I was hooked. I was in hook, line, and sinker. Thought I knew everything, and ended up realizing that it was going to be a long journey for me to learn.
Oh, so you mean that you didn't know everything right away?
I did not know everything. I sure thought I did. Let me tell you something. I mean, I've told this story before, so I don't want to be too repetitive with it. But I went up about 125x from my small start, which was about a couple $1,000s. This is going back about 20 years. So, I probably had a little over $500,000 today's money. I was shopping for yachts. I did not pull out one penny. I always like to point that out in the story. I didn't pull out my original 2000. I didn't buy a car. I didn't do anything with that money at all. I literally had it and then drained it all back, every single penny, including my original 2000 I lost. And I was completely humbled by that experience. And it took me a long time. I like to point out that I was a slow learner, years. I see other guys that say, oh, yeah, I started and they're pretty good within a year. God bless them. That was not me. That was not me at all. It took me years.
Yeah, and there's nothing wrong with that. And I think a lot of people have the expectation, or they get in at a good time and they're like, oh, this is easy. I'm a genius. And it's like, most people have been doing this for years, and the market changes a lot over years too. So just because one thing worked for the first 3, 4, 5, 6 months you were into it, doesn't mean it's going to work over 5 years, right? So it doesn't mean that you can sustain this for that long.
And, you bring up a great point there, but also the environment, right? The understanding of the market environment. What kind of market are you trading in? I was trading in a bull market, but more specifically, I happened to find an industry, which was biotech. This was just while people were coming out of the internet bubble.
Mm-hmm.
Biotechs took off, and that was really primarily what I was trading. So it wasn't that I was a genius. I just literally fell into that gold mine. And it ended up being more of a curse than anything else because it delayed my development. In my mind, I thought I knew this is what you do. This is what works, etc. Everyone else is dumb. I'm smart. I'm going to be a billionaire soon. This was the mentality. And I can understand that that's probably the mentality for noobs these days when they jump in and make a few good trades.
Oh, man. I mean, everyone in the market should be able to relate to that, unless you literally buy the exact top immediately and never have, felt profit. But at that point, before you entered, you were feeling that way probably. Oh, this is going to be easy, best investment of my life, whatever. So, yeah, I mean, it's really good to be able to relate to that and for people to know, like, you're not alone. That's how you're supposed to feel. That's how everyone feels. But don't let yourself feel like that all the time. You need to humble yourself. And you were lucky enough that it was a very small wager at the beginning, that many people, they start with their whole life savings and it's hard to get back out of that hole if you dig it so deep right off the bat.
That is true. I mean, that's 100% correct. I mean, I had some pain, obviously, in the way it went down. Basically, I lost money of family members as well,
Wow.
Things like that, because I was doing well. I didn't ask for it. They asked me. I gave him proper warning, so I could feel decent about that. But it doesn't matter when you lose money of family members, you feel low. I was the lowest it got. And it was interesting because I had a job as a trader, but that's different. When you have a job as a trader, you basically get a set of scenarios where they say, hey, trade this if that happens, trade that if that happens, or literally buy this, buy this, buy that. And you're being coached
Mm,
to do something very specifically without teaching you. I mean, they don't really teach you anything,
right.
or at least they didn't back then. So we were kind of on our own for the learning process and just following rules and pushing buttons for them.
Yeah, that's crazy. That makes sense. So is there anybody that you looked up to, or did you have any mentors when you got started?
I mean, I had a mentor, so to speak. He was a wealthy trader. I definitely looked up to him, and I really looked up to anyone that was better than me, and he certainly was. He was one of the best that I ever known. He wasn't the nicest guy in the world at all. He wasn't trying to sit there and teach me things. He more apt to talk some dirt or put you down than anything else. In hard lessons, and if you made a mistake twice, he wasn't about that, right? So, but the point is I did have that, and I'm thankful because I did get to see with my own eyes that someone could really do it. I know this happens too, is that people, they get clouded in their mind that it's not possible. I couldn't do it, so it's not possible. It's all a scam. It's all
True.
manipulation. It's this, that, and the other. No, I've seen it happen, so I always knew, that guy was very capable. So that's something that's always been in place for me. I mean, now my true inspirations, they were Gann, Livermore, Ed Secoda, guys like
Mm,
that. And it was all more about the things that they said more than the strategies themselves, and understanding that they were rule based in their approach. And that really slowly gave me the discipline to understand that I had to be consistent in my approach for me to really see results that were going to benefit me and see beneficial changes.
that's really good advice. I mean, I know that I looked up to you starting out, and I just, people really need to take what successful traders say seriously and have something from them in the back of your mind at all times, right? Like my one piece of advice I'd always taken from you is manage your risk. And it was as simple as that. Just don't overexpose yourself. Just make sure your risk, make sure you're always covering your six. Make sure your back is always covered because the market can blindside you at any moment. And so since pretty much day one of trading, I've just never wanted to risk a lot because the very few times where I try to be kind of, risky or edgy, I would get burned. So, now I've done this for 4 or 5 years. Over the course of those years, I've just realized that consistency and not giving extra risk to at any one point is what's sustained over the long term. And I've learned that from you.
I appreciate that. I'm glad to hear that. I mean, because that's definitely a message that I want to convey to most people by far. Because to be in the game, you need some cash flow, right? So if you lose all your
Right.
cash flow, you're no longer in the game. But also, once the risk gets too high, you just cannot think in the same manner. I mean, everything I speak about will have some element that traces back to exactly that, and it's because I basically lived it. Unfortunately, I had some
Right.
terrible moments where I did not manage my risk at all. So I reached a point where I came to understand, like, oh, okay, you know what? It doesn't matter how good I get because it happened when I was good. So I became a very good trader, and still would have these moments where I was going to take my shot, so to speak. And it's just a false mentality. You're a living example of it because you said you've never taken those kind of risk, and look at the success you've had. So
Yeah.
that
I
is
mean, I can't say I
literally the
never
best
have,
thing.
but you're so right. Like,
Well, meaning never, you probably never put yourself in a position to lose it all. I
right.
would
Yeah.
say, that
100%.
kind of thing.
I
Yeah.
just can't do it because you're right. I wouldn't be sane. Even if you win, it's not worth it because you're sweating it out for how long. And if you lose, it's not worth it because you've got nothing. Right. And then if you do it once, you're just going to do it again because it worked once. Right. But it's not going
You
to work
nailed it.
often.
Yeah, you nailed it right there. Once you do it once and it works, I mean, you're destined to drown. It's going to happen. The market will get you. The market knows. I promise you. You guys don't think it's a living creature. It is. That market knows. Oh, there's some people out here. They're willing to risk it all. And don't worry, because the market chops on all time frames, right? Sometimes it's chopping on the 1 minute, the 5 minute,
Right.
the hourly, the 4 hour. But guess what? The moment it starts to chop on that daily or weekly, it's coming for you, the guy who's risking it all. And
Yeah.
it's going to get you. They're coming for you. They're going to get you, and you're out. So it doesn't even matter how much you win. They'll let you take it. Go ahead, be up 10x, 20x, 50x, 100x, 1000x. And guess what? Suddenly the guy disappears off Twitter and you never hear from him again. I wonder why. I wonder what happened. Well, what happened is he's depressed because he dropped his 5 mil that he turned from, 5,000
Yeah.
because it was never his to begin with.
We've
It's
seen
that
it too
old
often.
saying, and yes, exactly. And it was there, but it was temporary. He was
But
holding it for someone
I
else.
think that one of the biggest takeaways is what anybody that's new can take away is you said it was never his to begin with. And you're so right. Like, this is why on Twitter, I stress so much, put money in your bank account. Like, if it's on a crypto exchange, it doesn't matter. It's still the markets. Like, if it's on the crypto exchange, you can still lose it. You can still have a 5-minute period or a 5-day period where the market kicks your ass and you're going to make it back. And then you lose like 50% of your account or whatever. So, like, siphon it off. The only way to really de-risk is to get the money away from the house and not let the house take it back.
Absolutely. And that was part of my original statement when I was telling you about how I started out, where I went from 2000 to really about 265, 68, something like that was where my height was at that point back in the year 2000, 1999 area. Well, at that time, like you said, if I would have pulled some off, even to spend it, that would have been nice, right? At least I would have had a little car or a down payment for a
Right.
car. I put it towards something. Do something that gets it out, like you said, because in my mindset, I was so convoluted that I was thinking, well, look, I can 10x, 15x, whatever's in there. If I take 20,000 out, it's really 300,000 I'm taking out because I'm looking at future profits from that money.
Right.
That was the mentality. That was it.
Yeah.
I wasn't thinking about a million. I was literally, I always say this to embarrass myself because it is embarrassing. I was shopping for yachts. I had nothing. Well, remember going there, sitting with the guy,
Wow.
drinking the glass of champagne. That was my goal. My other friend who had more money than me, he was planning to buy a football team. And we were smart kids. We weren't dumb kids. We were
Right.
smart kids. We tried starting a company that was very similar to what like to one of these, like, whether it was MySpace then or Facebook now. We had some thoughts on that.
Oh, cool.
We poured money into that as well, down the road. But the point is that we had big dreams, but we weren't so smart. Now, he lost a lot, but he was able to hold on to some. I literally went completely to zero. No, it is key. So I mean, that's the idea. Is that you actually brought up the good point there, which is definitely, if you pull that off, then your chances of risking it obviously are zero at that point. At least you have to go through some steps to put it back on, to where there's some breathing time in between to say, all right, did I reassess? Am I ready to put some money back in? And always keep some for yourself, keep some reserves.
Yeah, exactly. I mean, imagine if the thing is, if you put in $2,000 and turn it into 200K, why can't you do that again? Right. So why not take off 150K or whatever, and then you've got more capital to start with now, but you've also got more capital to move elsewhere and actually improve your life and improve your situation with, and maybe decrease your debt or whatever. So now you've got 20x what you started with in account, or 25x what you started with. So you're already way better off, but you also have all of this money outside of that now too. And you're setting yourself up better for the long run.
100%. Very well said.
But unfortunately, it's hard to think like that at the time. So, the markets, that's what they do, is they prey on the mentally weak and the emotionally week. So let's get to your morning routine. What time do you start in the morning? Do you have like a certain coffee in the morning, or breakfast, or energy drinks? Like, what really gets you, like, what is your morning routine look like?
I do. I mean, for me in the mornings, basically, I'm usually up before 5 on gym days. I try to hit the gym really quickly and then roll back into my normal routine.
How often do you go to the gym?
Oh man, it depends. I mean, if I get in streaks, I'm very streaky. Like I'll go, 5 days a week minimum when I'm doing well, and then I might cut that down to, well, I'm on a vacation from the gym. So I want to get in there 3+ days, but it really depends on when you get me specifically. Plus, I have 4 kids, right? So
Right.
it's not, I got some built-in excuses which are helpful, but the key there is that I always want to try to get back and at least spend some time with them. So on like a non-gym day, I'm up by at least 5:30 at the latest. I make coffee for sure, cappuccino, right? I have my morning cappuccino so that I can function a little bit, because I'm really sleepwalking until then. And then I make sure my kids are up, make sure they're rolling around, give them some vitamins, spend some time with them. That's key for me. I make sure every single day I spend time with them in the morning. I make sure I drive them to school. I don't care what's going on in the market. Could be max up, limit down. Doesn't really matter what's happening. Could be big news, bad news. I don't care. I'm going to, regardless of the market, make sure that I do that element of it.
Very cool.
For sure, just to make sure that they have that moment with me specifically, because time's fleeting, right? So time's the most precious commodity, especially with children. So I always do that. But then, after that, I believe it or not, I'm just glancing at the market. Did anything crazy happen overnight? I look at S&P futures. I look at Bitcoin. And then I just wait to kind of stroll into the office, which I normally do after dropping them off, which is shortly before 8 a.m. my time.
How close is your office to your actual house?
Oh, it's a terrible drive. It's at least 90 seconds away.
Oh, wow.
So, yeah,
okay. So I didn't know if you actually had an office like separate from your house, because you always talk about your wife dropping you off food and stuff. So.
Yeah. It's right down the street. Literally.
Awesome. So it's actually not at your house, but it's just very close.
Correct. I want to build an office on site on the premises, but I don't have that now. I had that before. Maybe when you spoke to me back in the day, I had a ranch. I still have the ranch, but on the ranch, I would have a separate facility where my office was, and we moved closer to town where I live. So at the moment, I don't have that set up, but we're looking to get
you
there.
Poor man. You poor man.
Oh,
I'm so sorry.
It's terrible.
So sorry. It sounds awful. Oh man, especially with gas prices going up, you're gonna have to start walking to work.
I'm telling you, I wanted to buy a Tesla, but I'm embarrassed to do. It's like, really? I mean, I'm gonna buy a Tesla and drive four blocks to work.
Yeah, especially you live in a warmer climate, so maybe you could just get a motor scooter or a bike.
Exactly. Jog there.
That's funny. So what kind of setup do you use? Do you have like 500 million monitors and like a stock exchange crazy panel to your left?
I have a crazy setup. I have to admit that I have an embarrassing setup of 6 monitors. One is absurdly big, too big to mention, but I only use 4 of those actively. So I have 2 where one's kind of set up where it's a multi-time frame exchange. The big one has news, and so I'll have my news system that I have, the news service. I don't want to promote anyone, but I have the news service on there just in case, and it's big because I'm.
If you think it'd be helpful for other people to use, feel free to mention it, because that's what this is about.
Once you're capable, I say go for that. I mean, I like to have a multi-time frame setup. I have some quick look systems that I built that just allow me to kind of look and scan, and then it doesn't happen too often, but I'd say twice a month I'll see something that's pretty obvious that I wouldn't have seen if I didn't have it sitting on the big screen. So that is something I like to do as a quick look. It's color coordinated for me on a multi-time frame basis, and that helps me a lot, and it more than pays for itself just based on that. But really, it's the 4 I got used to. Unfortunately, when I started trading, I started originally on a 3 monitor setup, so there was no going back. Once you use it, it's very hard to go away from it. Like when I go on a vacation, I have to bring at least a monitor with some type of monitor one just to have a second one.
That's awesome.
I just can't do it on the screen, so unfortunately, it's just kind of how it goes. But
this is my carry-on. Just a 30-inch monitor.
Oh, it's ridiculous. No, I don't have to. Doesn't have to be large. I just have to have something separate.
Oh, okay.
Now they have the cool one with wings, but I never went to it where it has like a wing on the left and a wing on the right. I got to purchase that at some point.
Interesting.
Saying that's pretty good. We just strap it onto your laptop. But for me, that's it's a really 4 that I primarily use, and it just I'm a screen whore. I got like 150 tabs open. I don't know why. It's ridiculous. My wife looks at it. She just shakes her head. She says, this is unbelievable. And then my computer crashes every couple of days. So that clears it out. And then I rebuild them, basically again. And I don't know why I do it that way, but I do. So, otherwise I'd be giving you
controlled chaos.
Yeah, it's controlled chaos. I got a couple, screen setups that I like to look at. So I'll set up something specifically, maybe with RSI, something with, my indicator. I don't like to put too much on one screen unless it's like an evaluation for a video. I always tell people, this is not what I'm looking at. I'm keeping it simple, I promise you. So it's just more for a video so that I can kind of go back and forth. But that's kind of the way I'll go about it in terms of the computer viewing, things of that nature, just so that I can have a better look. And it's something that I'm getting used to for so long. I just can't get away from it.
Cool. Well, that's awesome. So let's get down into the dirty, and let's share your screen, and let's get into the computer stuff. So what is the first website that you log into in the morning when you get onto your computer?
First website is, I told you I have my news service, right? So that's just something that I'm always kind of peeking at first and foremost, just to make sure there's nothing under the radar or anything along those lines. But first one is TradingView, right? So that's got to be the first site that I'm looking at, and then just doing a couple quick scans from there.
Is there any other like special platforms you use to your advantage, or like, products or anything?
I am not that guy. It's a question I get all the time. I've done it. I've done it. You know, we started off with some high tech software when I worked for firms back in the day. They were very cool. I love screeners are awesome, but I've just come to a point where I really don't use them much myself.
Oh,
You know, I look at about 12 to 14 equities typically. You know, I'll veer off that a little bit. I have my watch list for crypto, which is going to be based on sectors.
cool. And we'll
And
actually talk
then
about that more in a little bit. So hold on to
Oh,
that.
okay. Yeah, yeah, I'll hold on to that. And
Cool.
then, you know, from there, it really is, I'm a relative strength guy. I mean, we could show that, you know, so this is something that I'm going to look at all the time, which is relative strength versus the market. I mean, you also know that I'm a Luna guy, right? So, you know, with Luna, you know, so all I'm really looking at is I'm just looking for a moment of time. This bottom one, it's just all it is going to look at the actual symbol that I type in versus the total crypto market. And I
Oh,
just
cool.
want times where it's showing an outperformance. So when it drops over this 200, like something like that, I like to look at it on the 4 hour. I'm interested. That doesn't mean I'm buying. It just means that now I'm going to focus in on this area and see if I can find an actionable reason to long.
Cool.
And I want it as simple as possible. The things that I'm doing, sometimes they sound complex, but they're not. I really am simplified. If I get this set up here and a hidden bull divergence, I'm going to go ahead and try myself along. If I level up from market structure, which is always first, right? So if I break this trading range into the next, oh, I might go to lower time frames and see if I can add to that long, you know, in hope that I catch a runner. And that's kind of the idea. Now I have some other systems that I'll use for momentum looks that might tell me, hey, get out or take your foot off the gas a little bit. But ultimately, I do try to keep it as simple as that, where it's
Cool.
all going to be based on performance alone and who's outperforming. I just developed over time a process that says, hey, if I'm looking for shorts, I want things that are underperforming. If I'm looking for longs, I want things that are overperforming. There's other ways to do it. There's a lot of right ways to do it,
Hmm.
but that's just my system.
Cool. So you mentioned you have a watch list. How do you go about putting together a watch list then? Obviously, things that are outperforming the market. How do you find them and how do you construct your watch list?
You know, so my watch list is actually again going to be like sector based, something like, you know, if I bring up a watch list like this, so I have majors, right? I'll have some color coded stuff like you're talking about. You know, it might show DeFi and the dot ecosystem, exchanges, Hawk watch list. So that might be specific. Once I've identified a few, I'll throw it in there, and those are the ones I want to watch closely that day. Majors, NFTs, right? Mobile trading, POS, POWs, privacy coins, smart contract. So when the markets are moving up or down in a strong manner, then that's going to put me into a position at that point where I say, oh, okay, well, now I want to go ahead and focus on that particular watch list. When I get in that watch list, it's just back to this again. It's back to who's outperforming, who's underperforming. And that's the only reason why I want to peek at the watch list is to go through and say,
Very
all right,
cool.
where might there be an option? Now, again, I'll always tie market structure into that. Really, I want to jump in and say, all right, did someone just leap out of a 4 hour bear market structure and then they broke structure? Oh, I got to pay attention, right? Maybe I'll set an alarm or look for a hidden bull divergence at that point, or zoom in and see if I can buy a pullback.
Yeah, I love how you had those different sections there. And that's probably a really good thing for people to monitor is what's hot, right? If you have NFT section, you know, DeFi was really hot for a while. You had layer ones that were really hot, layer twos, like whatever sector is hot, maybe separate them into their own watch list and really keep an eye on that sector each day, you know, rather than having them blended with everything. It might be a really good tip that people can take away from this is to separate them off and really keep a keen focus on that sector specifically.
Yeah, and that's one of the things I did learn going all the way back to the beginning, where I mentioned that I was big into biotechs, and biotechs were kind of like a bad word back then. You know, it wasn't something that was mainstream as it became. So I understood kind of a little bit about focusing on the sector in that situation. So same type of thing. So if one sector, you know, if layer ones are taking off, maybe one has just expanded so greatly, but is it going to be a run on those? So I'll peek and say, hey, are they all outperforming? If they're all outperforming, well, now I have a couple choices, and then I can just buy wholesale, right? I can wait for a deep pullback where everyone thinks, oh, it's over. It's like, no, they're all outperforming. I'm just getting a deep pullback on this one. This is the one I want to look for an entry on. So that's kind of the format that I go into. And again, everything is really as simple as possible.
That's great. So I know you're a big alert guy, right? You use lots of alerts.
I go back and forth on that. You know, I go, you know, I Jesus, I think I have a deal with TradingView where I got like 1,000 or 2,000 alerts. Sometimes I'll set them all. Believe it or not, I'll reach the max. I'm like, what's
Right.
going on? But then I'll go through periods of time, months, where I'm barely setting any at all. So it really is a function of what's going on. I mean, of course, if it's alt season, I better be setting
Right.
alerts left and right, right? So that's kind of the idea behind that process, is to kind of see where I'm at in the market. You know, if things are just chopping up, do I need 5 million alerts? No, not at all. In fact, what happens is I notice, if I'm being honest, when I set too many, I almost ignore them, right? You probably know my stories with you where I said, Jesus, I had a perfect alert on the thing. I didn't even buy it, right? So it annoys it annoys me to no end. So what I would suggest for people that are going to set alerts is just more of wait for some type of action first. And then, the real alerts are going to be what? Monthly support, weekly support. Right? I like the 2-week chart, something like that, a high time frame dynamic support. And
Good
then
point.
once you get that alert, go ahead and zoom in and take a closer look at the price action around that area and see if there's something actionable that comes from it. That would be the process of how I would advise people, because when I'm doing 500 alerts, it's a mistake. I shouldn't be doing it. It doesn't help me. It hurts me more than anything else. If I had a team here, I got used to having a team for a while, and that was helpful, right? And then when I had alerts, someone else was just making me aware, hey, this is going off, that's going off, and I would check the ones that I needed. But for the most part, I'm solo as it relates to trading itself. I mean, I have some people on Discord that are awesome that throw some suggestions, but as far as my own alerts, they're not being managed by anyone but me. And if they're just going beep 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 beep, I don't even look at them.
Right.
Right. So I mean,
Overstimulation.
yeah, it's like I know what's going on with Bitcoin. The rest I missed. Bad enough I got them coming to my phone where I have 150 messages. Like, I'm not reading 150 messages. I just delete them all.
So is there anything in the market that you're actually watching right now?
Wartime climate, right? I don't try to know anything specifically. Right. I mean, obviously, back to this same example, Luna's really the only one with Bitcoin that I've been trading in terms of crypto. I'm not trading any equities at the moment, just too much in the news cycle. I've been kind of explaining that to anyone. I'll just wait this out a little bit. If S&P continues to hold off somehow and closes these weeks, holding this range, then so be it. I'll stick my toes back in, but it's not worth it for me with all the, the fact that you close overnight. I love the close. I actually love the hours of traditional markets.
I agree.
But I hate the fact that you wake up and it's like, oh, look, we're down 400,
Yeah. That's a really good point you brought up, though, about in times of uncertainty, maybe just sit out, right? Like, there's no reason to force things. And right now, the smallest bit of news is making huge moves in the market. So rather than trying to trade 500 different assets like you would in a mega bullish market when everything's popping off, like, focus on one or two things, kind of sit out and watch the rest and just kind of wait till everything settles.
Oh, wow. I mean, sitting out is a position, and I could talk to you about sitting out for 2 hours, literally, and the reasons why and the benefits of it. There's significant benefits to sitting out. Ultimately, it's basically something to where if you can let everyone else battle it out and you're sitting out for the most part, you're creating a scenario to where when that fight's over, just imagine two guys killing each other in a ring for an hour. You could walk in and destroy those guys out. There could be two UFC fighters, right? But they're finished at that time.
Yeah.
So it's the same scenario. You get to walk up and pick up the crumbs and join the new trend in whatever direction it's going, because you have the mental capital, most importantly, to do it. And you have the physical capital left because you didn't just blow your wad getting chopped up in some crazy time frame. So always feel comfortable sitting out, because sitting out's a position. But at the same time, if you are going to take positions in a crazy environment, just manage it by taking smaller positions, wider stops. Go ahead and take some shots where I'm not even going to feel this loss, but maybe I catch a 3-1 or something along those lines. Great. If that's the case, so be it.
So do you like to market order in, or do you like to set limit orders when you're going to enter a position?
My little motto is buy wholesale, right? Sell retail, or short wholesale and sell retail, that kind of thing, or covered in retail. So typically I'm able to limit in, but I do both. I don't really care. I don't focus on the cost of the trade or anything along those lines. I have things involved in my trading style with crypto that are specifically meant to cover the cost of the trades. But at the same time, I don't believe I need to be thinking of anything else other than my entry at that point. Once I've made the decision to enter, once I've decided where my stop already is, then at that point, I'm just trying to get in. And sometimes you zoom in a little too much and realize like, I might miss my entry here. So I'll just mark it in. I don't mind doing it.
Do you have like a set risk management strategy then that you use religiously?
Sure, absolutely. I mean, with risk management, again, that's another thing where you could spend 2 minutes or 2 hours on that just as easily, right? So, I mean, first, I would say for most people, they need to identify exactly what they're willing to lose. Then create their position size based off of like a simple math formula, which you're going to derive that from the location of your stop, the location of your entry, and how much you're willing to lose. And that's going to tell you what your position size should be, right? So, that's a very basic thing that we've all posted on Twitter 100 times. But a normal person needs to do that every single time, right? Someone that's experienced sort of kind of understands that, and we would be lying to say like, oh yeah, I'm sitting down and I'm breaking down the numbers and here's what's happening. I mean, in all honesty, I'm never really risking 1 or 2% or anything along those lines anymore. So it doesn't really come into play specifically in my trading. But what I do that's important, in my opinion, something I feel strongly about and worth mentioning, is that I treat every trade like two different trades. So, round number, if I buy $10,000 worth of XYZ, then $5,000 of that will be for my original trade idea, the reason I came up with that trade, etc. But the other 5,000 will always be what I call a take profits quickly trade, like a TP1. And I'll move that TP1 very quickly if I feel things are a little shaky on a low time frame. Why? Well, that first half is I intend to have a super high hit rate. Crazy hit rate, probably near 80%, which sounds nuts, but the reality is markets are choppy. So unless I was just immediately wrong and bought, the new price, and they dumped on me, which happens, I'm wrong in that way. But regardless,
I assume your risk to reward would be really really high on that as well. Like if you're losing that, you're going to take a small loss. If you're hitting it, it's going to be a nice win.
Yeah, well, for the original trade, right? But for the second half of that, it really is probably, if you looked at my R to R directly, it's probably not good at all. But the hit rate is so high that it doesn't matter, right? Because I'm actually not even calculating it. I'm sitting here in a position to where I'm saying, well, maybe I'm up to half R. I'll take profits on it if things look a little shaky, just because I'm putting money in the bank in that situation. And it took me a long time. And I think anyone else that tries this method, it's going to take them 50 trades to realize it. But they're going to look back and say, what in the world? On these 50 trades, I hit 37, right? And out of those 37, I was up X amount. It paid for all my trading. But here's what happens in those situations. The reason I like it is there's a few different things that go on here, right? One, I have the amazing hit rate on those. The second thing is, as I mentioned, it pays for all my fees and then some. But I've also had so many occurrences where I get re-entries, right? So I covered that, but now the market's just chopping around. So while my original trade is still open, nowhere near the stop, just kind of chopping around, normally people get frustrated. Instead, I say, well, this is falling back to my value zone. I'm getting in wholesale price again. Let me take the trade again in that situation. I've zoomed in, I found an actionable reason along. And sometimes I'll see 2, 3, 4, 5 different small take profit ones in a chopping market and end up losing the original trade. So here I am. I lost my original trade idea, but yet it's a profitable trade now.
100%.
Sometimes highly profitable. Exactly. So but the other thing is, there's one more point to it. It's worth mentioning. Because I'm more focused, because I'm not married to the idea, I don't develop that bias. Sometimes when you're in the trade, you have the bias now. It's like, well, I've been riding this out. This thing's going up. I know what's going on. We're going to break higher for sure. And you lose sight. Like you might get the low time frame UTAD, right? The up thrust after distribution. And you say, I'm going to ignore that this time. You know what I mean? Yep. Well, I'm not going to ignore it when I'm paying attention. I've already took 3 shots at it. Now I'm realizing, this was a setup. You know what I mean? The setup may not be so good. And maybe I didn't capitalize on it, but I probably end up having to take a loss still on that first one. But I'm ready now to pounce on the short that's there and available. And I don't think people should go long, short. Be very careful unless you're very, very, very experienced to do so. But this is one of these things that will come out of doing this, because I'm not married to an idea. I understand that I don't know anything, and it allows me to react to the fact that I've received new data, and the new data provided something that says, this low time frame is telling me there's some trouble in paradise, so we're probably at least going to pull back on a higher time frame, and that helps me to stay engaged and not married to that idea.
Yeah, I think that's a good point you bring up too about longing and shorting. Sometimes I'll close a position. Let's say I'm in a short, it drops to support, and I close that position. People go, okay, are you going to long now? I'm like, no, I'm just getting out of this position. We're at a support now. Doesn't mean the support will hold. It doesn't mean we won't go lower and wick below where my stop loss would be if I entered a position right now. But like you said, no position is a position. Sometimes it's better to take what you made from the market, sit out, observe, and wait for that next opportunity.
every once in a while, you'll find like a really nice spot where you say, oh, the 4 hour, the daily, they match up. This is support, this is resistance, etc. I'm taking this trade. Now, sometimes I like to lose those trades, right? Because the best buy signal is a failed sell signal. The best sell signal is
Yeah.
a failed buy signal. But those are on very specific trades where you're on a very specific support and resistance. So you don't want to do it all the time. But a lot of times, like, hey, I have conviction here for a good reason. I'm okay losing because I know this has a good risk structure for me based on a support. But if I lose that support, oh wow, I might have found the golden spot to enter. And that just goes back to market structure again. There was
So
a flip
true.
in market structure, and now you should be thinking the other side, other way, which is that expect continuation until you're wrong and buy dips.
Yeah. And if you get good at invalidations, you do know that point where if my trade doesn't work out, it's going to go very strong in the opposite direction. So maybe I can get a little piece of that too if I do get invalidated on this trade idea. So
Absolutely. Normally it's on the higher time frames, but yes, absolutely, 100%.
let's go on to your favorite indicator. I know you love RSI, and I would really like to get a more in-depth explanation for everyone to really dive in and see how you use it so successfully.
Yeah, absolutely. So obviously I use an indicator that I have that's based off some ideas of RSI, but I like the way I use it specifically, but not everyone has access to that. So I don't want to get into that, which is true vibration. But RSI has a very similar concept. It is harder for a lot of people. So I tell people like it's going to be a deep dive. Don't get into this and think overbought and oversold, right? Because
Right.
all the times that are mostly overbought are going to be your biggest runs, right? So with
And just to cut
RSI,
you off real quick, you
yeah,
do
go
have
ahead.
an indicator called True Vibrations. That's amazing. Is there a way for people to get access to that from you if they want?
Yeah, I mean, they can DM me on Twitter. Don't pay anybody. Anyone that contacts you that says you're going to pay me for this or that, they're a scammer. It's not me, so be very
Perfect.
careful with that. But you can DM me. I have someone that answers those. It's not me. I'm not sitting there answering those DMs. I can't even do it. It blinds me. I go nuts. But so be patient. You can ask for it. We'll talk about how you do. You don't pay anything again. So I want people to understand that. But
Awesome.
but it's also what I tell people is if you're not looking to get into a deep dive and really learn that indicator and understand there's going to be some growing pains, then don't do it because it's all going to be based on market structure first, which is what I'm about to talk about on RSI too. But
Great.
ultimately,
I'm ready.
it's a situation, yeah, exactly, to where uh, any indicator you embark on, just say, hey, I'm going to focus on this guy for a long period of time. Don't do RSI and then say, hey, I'm going to add OBV next week, and then I'm going to add, XYZ the week after, and then I'm a pro.
Good
No, it
point.
doesn't work that way. So ultimately, with this, again, I mentioned earlier, you have divergence is something I'm always going to look at, understanding that when divergence comes in, it's a clue more than anything else. It's worth focusing on that point because maybe price is ready to reverse and that's okay. But the fact that you've set in a divergence, you should now be setting in the range that's going to be that decision point, which is a key. So it allows me to say, hey, I'm in an uptrend. I'm looking for a spot to where things are going to advance, and hidden bull divergence is usually where that takes place. So it's just a matter of now zooming in and then getting ready to, you could wait patiently for it to level up out of this particular trading range and then take a long. And then you're looking for longs all the way through. And by the way, what a hidden divergence is saying is expect a higher high. That's the message. Expect a higher high. Once you achieve a higher high, the goal has been met. The indicator helped you make that decision. But it's all directional bias for me, right? So I say market structure first. Well, the market structure has been up. Okay. So now that we're looking at directional bias, we're hoping that we continue higher. Doesn't mean we can't trade the opposite direction. It's just that you need to know I'm trading in the opposite direction. That's the key element for that, right? If I was going to give another point beyond this, what I would mention is something like bear divergence. Well, regular bear divergence is most prevalent in bull markets. So if you see that, it's not the end of the world. It just means that a cool off period is needed, right? So when you set something like this, as an example, a bear divergence, well, you could say, well, look at this. We strolled up all the way up this way. Well, again, it doesn't mean it's over, right? What it means though is that there's a reset of some sort coming into play. And I'll run through this very quickly just to kind of show how this transpires. Now, obviously, you've seen that the runs were getting shorter. I shouldn't say obviously because some people don't see that at all, but the runs are getting much shorter in terms of their length. The breakouts are much shorter. So already there's trouble in paradise, right? We all talked about this when it was
So
happening.
we're saying
Uh,
declining momentum is the key
ex-
there.
Exactly, right? So you're getting the declining momentum, as you mentioned, right? But the thing that you're trying to look for, what's the real changeover going to be? A couple different elements. One, to break an X point, right? An origination point of a bear divergence, right? So that's, excuse me, a bull divergence. So if I had a hidden bull divergence right here, as long as I'm setting these divergence, breaking an X point is going to be the key to this. Again, same thing. So this is the X point of a hidden bull divergence that comes into play. Once I lose that, that's a rule-based break there. So this is now telling me there is now a problem. And what's probably going to follow is you're now going to have what I call orderly momentum movement. You have regular bear divergence, right? There we go. You got it.
Yay.
Now you have hidden bull divergence that comes in, and those tend to cancel it out, right? So you're going to cancel out your regular bears, which are hidden, and vice versa. If I had a regular bear, it's going to be canceled out by a hidden bull. So, excuse me. So that puts you into a position here to where we see this occur for a while, right? But the main problem is when we take a high time frame look like this is when this corrects itself, where you're no longer putting in regular bears and hidden bulls, and then suddenly you go from a situation to where your next top, where I'll show it right here, what happens? It's a lower high and a lower high in the RSI as well. So that's the first time it matched. Remember, we went price action higher high, diverging from your indicator lower high. Now when they match, this is not good because this is the confluence that you want to see for a trade. Now, there's already other things that you can learn, like this is a bad break here. We talked about this when it happened. In fact, when this happened, we
that's
said
the early warning sign, the early signal.
It's an early warning sign here, but this is a bad sign. It's not an early warning sign. Now, this is trouble. This is a hell of a problem because you flipped over. But now I can clear all this out and you can get more advanced. So now what do I have? I have a green line and a red line, which is pinkish, right? This is a move. There are two moving averages. You can put whatever ones you want. People get into their moving averages. Some like an 8, a 20, a 45, a 50, a 55, a 200. Use whatever you float your boat. That doesn't matter. What's going to matter is can you understand the confluence between price action and your indicator, right? So in a situation like this, if you're wondering, I have a standard. This is like an old Constance Brown reading, which is a 9 SMA and a 45 EMA. Again, this is a 9 SMA and a 45 EMA on RSI. So what happens? Well, we're going to look for periods of time where they both end up matching, meaning 9/45 on both, right? So that happens here. Okay. Well, what starts to happen? What's the change here? We went from a long sideways action. Suddenly they start to match and you begin an uptrend. So it's going to give some validity to your market structure uptrend. Now, if you had a bearish market structure at this point, well, then we're going to pump the brakes a little bit because it's always market structure first. But if we already have bullish market structure beginning, which we see that here, this is a higher high from that point. Okay, good job. That's good. And this doesn't change all the way until this point. I'm just going to keep them green for now, but you could see you even if you took this as a symbol, now there's 100 things you can do to sharpen this. And you certainly can be on lower time frames because the daily is not going to give you the best looks. But if you trade it from here to here, my guess is you're a pretty happy guy, right?
For sure.
Well, now we don't know if it's going to do one of its 40%, 60%, 80% drops that it likes to do. So that's something that we can't predict. So we're happy to sit this out as we've been discussing on this podcast, right? We can sitting out to position and wait for a sign. Well, you can get a simple sign just like that again, where they match again. They match here. You might say, oh, I missed this move. Who cares what you missed?
Right.
You caught this. You know what I mean?
Well, look at the reward, how quick the reward is too. I mean, you could sit through that chop for days and days and days, or you get in here and it's an immediate reward. So you're waiting for that chop to subside and you're waiting for those UFC fighters to beat each other up. And then you're going to see the instant gratification. Whereas, maybe if you are trading that chop a million times over to the left and you lose 50% of your capital, now you catch this big move, but you had 50% less capital to be able to catch the move with, so you didn't make as much money.
Absolutely. And there's two things you can do. You can wait till you get a crossover of your moving averages down here, or you can just wait till RSI loses it as well and just say, hey, I want to sit out until then. And then you come in and draw like a trend line. Basically, when that happens, you say, oh, well, I'm going to wait at least until that's broken, and you might find another entry over here. There's a lot of different things that you can do once you get a little bit better at it, but I'm trying to stick as rule-based as possible so no one says that I'm putting any type of cheat code or anything like that. So if we just do the crosses themselves, that would have been about right there where you would have got out. Again, you're super happy to be from here to here looking for longs more than anything else, or probably playing that long. And then very quickly, I'll switch time frames and then switch right back. You can also do something where you say, all right, well, I was on a daily, but maybe my exit's going to be based on a 12-hour because I want to get out a little sooner. Well, that might put you in a position. Now, this one's no better, but at least you wouldn't suffer again to say, well, if I lose this range, I'm going to puke, right? So there's ways to do that 4 hour, same type of thing. You could do it on a tighter time frame. So if anyone doesn't have the risk appetite to give up significant gains, I understand that because we're only looking at results. Yes, it flew, but it's not always going to be like that. And then those exits would have been, somewhere in here or somewhere in here after that run. So you're still getting the greater portion of the leg by lowering your time frame. And you're never going to be perfect. Don't try to be perfect. The purpose of a trade is to make money. That's the key here, is that I just want to get edge. I want an edge based approach here that's going to allow me to profit. So going back to the daily here, we'll just continue this on so we can look at it again. When do they match again? Right here, right after that big move up. Why would you possibly take it after that big move up? Well, maybe you wouldn't. Maybe you
Don't
just zoom in.
FOMO. Don't
Yeah,
FOMO.
exactly.
Just kidding.
Don't FOMO,
If you
right?
have, but the thing is, you can FOMO into these if you have a set system. A lot of people don't have a system and they FOMO for no reason, and then that's when you are having troubles.
Absolutely. Or, there's this, when I put a fib on something like that, if it hangs in the 0.236, I'll buy the breakout if it held that the whole time, just as it being pump susceptible. But regardless, it doesn't matter. I understand people that think that way. Zoom in, go to a lower time frame, and then on that 4 hour or that 15-minute, I don't go lower than that myself mostly. But in that type of situation, you're going to see it looks like a big pullback here. It's going to look like a significant pullback. And you might say, oh, I'm going to buy the next bull breaker in that situation. And it works out quite well. But again, this very simple process, again, gets you this one. Probably if you were doing it this textbook way, wouldn't have netted you much because you would have caught this big move. But if you were waiting for this cross again, you would have gotten caught. So again, you'll look for better ways to exit. It's kind of one of the reasons why I like my tool is that, believe it or not, my tool, you're literally exiting on one of these,
Right.
if not sooner.
100%.
But it's okay because this is just a simplified approach. The reason why I bring this up, I just want to get people started down that road, right? I want them to get on the path to understanding that, hey, you can look at edge, because if in the end, and by the way, over here it gets choppy, that's okay, right? That's a sign that something's coming up and something's changing. So view that as intel. Anytime something that works well suddenly isn't working well, you say, oh, well, there's a change in the market action, and I need to pay more attention to the fact that we might reverse here. That's your sign. But in the end, you ended up trading long from here to here and here to here and mostly here to here. And I'm guessing that you did well, right? So that's kind of the idea, is to give you a directional bias, not my stomach saying, oh, I know we're going higher. No, a directional bias that says there's edge to trading in this direction. And that's the basis that I like to use. And believe it or not, you can go far deeper than that, but you have to understand one concept before moving on to the next. And then you can get into things like range rules, right? I mean, where these numbers are very significant in telling us what the possibilities are, where this exponential moving average is. I can tell you that when this exponential moving average rolls above this 60 level, with Bitcoin, it likes to be about 65, but let's just call it 60. Guess what? That's when your booms normally happen, right? And that's that red line that's just sitting up there. And if it's hanging up there, you can bet that price is going to be hanging up there as well. You can go back through history. I don't really care what you look at. When that red line gets above this yellow line that I just put in here, I know this might look like a mess for people, but what they should be focusing on is look at that move, right?
Yep.
So, and by the way, it also gives you the counter move of understanding that when it doesn't, you're about to dump, right? So when it goes above that line and doesn't take off, oh, you're in for a hell of a pullback as well.
Yeah, true.
So same thing, red line above this level, that's where you get your big runs. Imagine if that's the only thing you traded.
Right.
If you only look to trade when that took place. So my point is that if you don't take an I know everything approach, if you just say, hey, I'm going to read the charts, you can find edge like this and create scenarios to where you're just trading in the proper environment. And the rest of the time, play with your kids, go shopping, go to the beach, hang out, do what you got to do, and say, well, it's not my environment. Now, maybe you perfect your craft during that time, and you might like to play around with less risk. But these are the scenarios where it's like, all right, a little bit more risk on, never your whole bank account or anything like that. But it's going to put you in the position to understanding that this is going to give me the greatest edge. And if I lose in that situation, I know I'm going to catch so many runs that I don't mind losing. It's okay.
That's a great point. And notice that you just talked about RSI for, 10 or 15 minutes and didn't once really mention overbought or oversold, which is what the majority uses it for, right? Or that people new to the space, that's what they use it for. People that are just learning about RSI, oh, it's overbought, it's oversold. And that's not really the most efficient and effective way to use RSI. Of course, there obviously are ways to use those to your advantage, but RSI is more used it for the longer term in ways like this?
Yeah, I would say that overbought, oversold is kind of a terrible way to use it. And in reality, I will say there's probably some overbought, oversold element, but they're a little bit unique to each asset, right? So with Bitcoin, it actually is a little bit of a different number. But at the same
That's a good
time,
point.
I want to trade things when they're quote unquote overbought, right? It's that old saying, at least that I have. It's like, you tell me there's a bubble, I'm not thinking it's going to pop. I'm going to think, how can I get involved in that bubble, right? Let me
100%.
jump in, maybe with small money in the beginning. I want to be part of that bubble, right? So
Mhm.
that's the idea, and I'll lessen my risk along the way, because that's where the bigger gains come from to begin with. So ultimately, that's kind of the idea. And I would say that if you're really looking to get into overbought, oversold, something like stochastic, a slow stochastic is a little bit better. And then you just use market structure. If it's a lower high and you're overbought, okay, that's going to be an effective look. If it's oversold, but you're in a position to where you're now hitting a higher low, good. Now I'm oversold, higher low, market structure's on my side. Then I like that signal because there's confluence between the indicator and what the price action is telling you, because price is king, right? So that's the first thing we have to find. There's gonna be all technical analysis is the way I look at it, right? It's footprints, right? It's detective work. So we're just looking at the footprints that are being left behind by the big money, the dumb money, everyone in between. And then at that point, we want to say, oh, okay, well, this is leading us toward this path. Then it's an educated guess. People hate to hear that. I'm guessing. Every time I take a trade, guys, I don't know. I'm guessing. But what you'll notice is I just showed you a series of scenarios where my guess is during that time I'm looking for up. And
Yep.
during that time I'm looking for up. And during that time I'm looking for up. And that's it. That's the magic is admitting that I don't know.
Once you kind of get away from that ego and need to be right all the time is when you can really start to see some success too, and start cutting your losers early.
100%. Yeah, well, you just named it there. I mean, cut your losses, get rid of them, readjust your scenario and strategy at that point, and jump back in. I'm one that's so willing to sell, and then if I reevaluate and say, okay, you know what, I still like the long scenario, I'll jump back in at a higher price. I don't think about it. It doesn't bother me at all. It's
So
a totally
true.
different trade. I'm in that trade to make money, and that's it. My risk appetite got a little bit too much for me, so I sold it. And then I reevaluated and said, hey, you know what? Time is the healer of all things. I like the way it held up over this time. Maybe it's ready to roll again.
Yeah, and Twitter makes too much of a point about buying the exact bottom or selling the exact top, and most traders and most successful traders, veterans, you don't try to guess or predict the bottom. It's much easier to tell if there's a bottom after it's happened. After you see it and it's actually happened, you can be like, oh, that looks like a bottom. If that is the bottom, then price should go up from here. So if I buy here, it should go up, right? So that's kind of the general basis of it.
100%. Couldn't agree more.
All right. Well, that was very informative. Just blown away by the RSI strategy and the way you explained it. It was so simple to understand, and really realize how much market structure is more important than the indicator. So a lot of people put so much emphasis on the indicator, but it's more of the price, what price is doing, and what the market structure looks like, and if there's confluence from your indicator. So,
100%.
Mr. Anderson, thanks so much for joining me today. I really appreciate having you. You guys make sure to follow True Crypto 28 on Twitter. Give him a follow. If you want to check out his custom indicator, True Vibrations, you can also DM him. And make sure to catch more of these episodes. If you want more educational content, subscribe to my YouTube. But otherwise, I would just like to thank you for coming. Really enjoyed having you. Is there anything else that people should know about your content?
Absolutely not. Nothing specific. I'm here to try to help people when I can more than anything else. So that's really the goal. We're all in this together, just to tell people like, hey, again, feeling like something is a weakness. That knowing that you don't know what's going to happen in the market could be your superpower. You got to be patient. The patient man wins. It was a pleasure being here. Let's do it again.
Sounds good, man. Yeah, we'll definitely keep in touch. I know we talk a lot, and I've really learned so much from you over the years, and I appreciate everything you have taught me. You guys, again, thanks for joining. If you want to check out Femex exchange, there is a link below. I know Mr. Anderson and myself both use that exchange. I especially like it on high time frames. So check out the link below, subscribe to my YouTube, and I'll catch you guys next time. Peace.